My name is David Ironside. I'm the CIO for Continental Europe of LaSalle, based in Munich. So I'm at home here. And we have a substantial continental European business with about 5 billion euros under management. And in the UK, we've got another 15 billion.
Great. Larry.
So Larry Young, head of International Investment Group at BNP Paribas, based in Paris, been there for 15 years. And I think I gave a quick presentation of our team and how that works earlier.
Great, thanks. Joseph.
Thanks. So Joseph Ghazal, Prologis. I'm the CIO for Prologis in Europe. I've been there for 18 years now. Prologis is an owner, investor and developer of logistics real estate. That's the only thing that we do.
Great. Sophie.
That was brief. Sophie van Oosterom, CEO and CIO for Cbre Global Investors. We manage and advise our clients and invest in across the risk spectrum for Europe. We have about 38 billion of assets under management in Europe in retail, office and logistics and residential, with a team of about 400 people on the ground.
Great. Arvi.
I'm Arvi Luoma. I'm head of European investments for Carey. This is your mic. We're a US listed diversified net lease REIT. We have about 22 billion under management, of which in Europe's just north of 5 billion euros in 21 countries. And long income's the name of the game, and security of income.
Great.
Heinz, Kummer, partner with CMS, law firm based in Germany, but we have a global reach and we're very much international. And I'm afraid to say I'm dedicated for 30 years to real estate.
Let's just start with you, Arvi. I guess, how are you seeing investor sentiment at the moment in Europe, in the current market? What's your view on that?
Well, I think it's clearly still very, very active. A lot of capital inflows. We're active across the entire continent. And it's been very interesting to see a larger and larger interest in more regional markets. Obviously, all the diagrams show a lot of money coming into London and Germany and so on. But what I find particularly interesting were the dots in places like Finland, in Eastern Europe, in Southern Europe, which I think is showing that the capital inflows need to move around, they need to find yield, and that's certainly a trend we've been seeing. Okay, good.
And Sophie, obviously there's GDP growth, but less so in the UK, but particularly in continental Europe, and especially actually in very high growth in Eastern Europe. What's your sense at the moment? Interest rates are still low, so therefore low bond yields. Do you see this capital continuing to flow into Europe?
We do. We actually were discussing it last week with our international colleagues, with our global CIO council, saying actually the most interesting opportunities we see currently are in the European market. And we see a lot of the capital being focused on that in terms of the different strategies. I was commenting on the difference in yield, and actually also the hedging costs from the US to Europe make it for a very interesting investment opportunity for the US investors as well.
Okay, good. And David, I mean, I know you're looking really after the continental European side, so let's ignore Brexit for the moment, much as I wish I could for significantly more of my life. But let's ignore that for the moment. Political risk in general, do you see that now as such a global issue, really, that there's less of a focus on that, whether that's talking about Italy, whether or not it's talking about rise of the far right in various places, whether it's what's happening in Hungary. What's your sense of political risk and how you're looking at that with your strategy?
We're certainly looking at political risk from the perspective of what it does to bond yields in individual markets. But what we're really looking at in each market is real estate fundamentals, so in terms of supply and demand. And that is often very external from what's happening at a political level. And we do believe that things are going to be relatively stable in the future. We don't anticipate a great instability, and we do see the real estate markets in a very good condition pretty much across Europe. So that's our perspective on it.
Okay, good. And Heinz, I mean, we're obviously here in Germany. So just pick up a little bit, if you will, about what, because obviously you're seeing the capital coming through your offices and what they're wanting to do. Are you seeing a change in the types of capital that are looking at Germany? Have you seen more interest, less interest, following on from Larry's presentation? What are you seeing for the German market?
Yeah, thanks, Richard. I think for the last 3 years in a row, I think it was a tremendous capital flow into Germany. I mean, it depends very much on the statistics. Would you generally see as a foreign investor or not within Germany? I mean, they have their home base in Germany, but still, I mean, they're Italian or French, whatever. But despite of what you to the statistics, I think 50 to 60% over the last 3 years was international money. US a lot, UK a lot, probably driven by the Brexit idea. Asian money tremendously, but decreasing, funny enough, this year for whatever reasons. I know that China has some new regulation in place. And we do see probably also Russian money, but this is very intransparent. But yes, I think Germany is still the safe haven, notwithstanding the politics for a moment, but still a safe haven mentality, and this works very much, and we are quite busy, yes.
Okay, and Arvi, obviously you're seeing it from a different side in a way. Given that it's very difficult to actually control political risks, and you're looking at long-term cash flows, really, how much do you take into consideration what's happening in individual countries in terms of risk, or are you really driven more by the assets themselves?
No, absolutely. As an investor looking to make 20, 30-year commitments, political risk is something we look at. As was mentioned before, following countries' bond rates and so on is an indicator of how the political situation is developing, but it's something we look at. There are ways to structure around political risk. That's something we look into. Obviously, we like the fundamental real estate to be important, but ensuring the asset and the lease can really survive any kind of fluctuation in the political situation, the economy is important, whether that's by using international guarantees or some other such methods to try and mitigate those risks. But it's certainly something we do focus on, and as a result of that, our portfolio in Europe is substantially weighted towards Northern and Western Europe. But certainly with the right deals and right structure, you can consider more, let's call it more challenging markets in the European continent.
Okay, good. And Sophie and David, actually, it'd be good to get both of your views on this. In terms of that de-risking portfolios, sustainability of returns, future-proofing, what's the strategy for CBRE Global Investors? And then I'll come to you, David, if I can.
De-risking, actually, we've been doing that for the last couple of years in terms of making sure that we focus on the right strategies. We've actually been focused very much on urban strategies. So in our investment focus and in our investment strategies across the various products, whether that's core or core plus or value add, we've actually been de-risking quite a lot in terms of the focus on the asset and the qualities of the assets and the locations of the assets. Sustainability is a very important subject in that too. So I think it goes without saying, it is very high on our agenda, and in anything that we do in our focus strategies and in our core assets that we're looking for, sustainability of those assets and the sustainability of the cash flows that come with that, obviously as a result, is very important. Our investors are asking for that, but very much the tenants in our buildings are demanding that. So it is part of the strategy for the last 20 years to make sure that we focus on the sustainability, and over the last couple of years we've really focused our portfolios on our urban strategies, locations and assets.
Okay, good. And David, just pick up that point, and maybe also just give us a view on what's happening in terms of capital raising. Are there particular funds or strategies that it's difficult to raise capital for at the moment, and somewhere it's a very easy opportunity because that's what the pension funds are looking for?
Yeah, beginning with the sort of sustainable investment side, we certainly see within all our strategies, and it's really very much our house view, is on focusing also on the stronger, bigger markets. And it's about sustainable growth, sustainable demand within those markets. What one doesn't see in the press so often is what we sell, and we have been selling and really very much focusing also on bigger markets. And where we see the future returns coming from is primarily from rental growth and access to that long-term rental growth. So again, leading us to the bigger markets and going longer in the bigger markets. Relating to capital raising and strategies, capital raising at the moment for Europe is rarely been as so straightforward. I think, as Sophie said, at the moment there's a lot of good opportunities in Europe. It may be historically expensive, but when you look at the real estate market level, things look extremely good. We've rarely had such low levels of supply coupled with such strong levels of demand, and it's really driving rental growth very strongly. I can see that everything ranging from our core strategies all the way up to value add, we are capable of raising money as long as we've got access to the right deals. It's certainly the case that some investors who have been fixed on relatively high returns, say 15% plus for value add, are seeing that they have to accept slightly lower returns to be able to do that and to be involved in the European market. But we do see capital raising being relatively straightforward, and we can see these deal flows continuing for the next 12 months and likely longer.
Okay, good. I want to dig down a little bit into some of the sectors. Larry, just give us a brief overview of, again, what you're seeing in terms of the investors coming into Europe. Have you got great news for Joseph in terms of logistics? What are you seeing?
I think yes for Joseph straight away. Logistics has really been the hottest market over the last couple of years, and I'll let Joseph sort of go into more details. But I think obviously office is still the largest sector. And some of the big deals, like we mentioned earlier, especially the big city deals in London, some big deals in Paris, in Frankfurt, and Berlin, and also other key European cities, has been driven by the office market, and like mentioned before, this rental growth and the fundamentals, and interesting lending rates as well, despite potential raises of interest rates. Logistics has been an incredibly strong sector. A lot of Asian buyers have come into that market as well. We mentioned buyers like Vestas, the big CIC portfolio, and other big deals there. Retail's more tricky, and I think there's lots of different parts of retail. High street is holding up, especially in the likes of Paris, Milan, some of the really strong cities. The best shopping centres are also holding up, but I think anything between the two is certainly struggling. And there's a big push for investors to look at alternatives, residential, hotels, student accommodation, anything that really focuses around the big cities and urban agglomerations, and is also linked in with some of the big infrastructure projects like the Grand Paris project in Paris, or Crossrail in London, or other infrastructure projects is another thing that investors are focusing on.
Okay, good. And Joseph, just pick up, if you will, some of the points that we've made, and how that also influences what's happening in your sector in logistics, and also maybe a bit about what you're seeing in terms of the pool of investors that are coming to you, and also some of the structures that you're using, like with Norge Bank, for example, those kinds of things that you're using to access different pools of capital in the market.
Right. Thanks, Richard. So, from a historical perspective, we've been investing in the sector in Europe for the last 20 years. So we have had the benefit of going up, going down, and then going up again. So we have that experience that I think very few have already in Europe, and sometimes I feel that we know a little bit too much than others, or we're much more risk averse than others today. As others have mentioned, capital raising for logistics is pretty much straightforward today. That's not the biggest issue. The biggest issue is finding the right products on the market. We're as well a developer, so that takes part of the problem away. But the fact that the sector is relatively young, 20 years is not, 20, 25 years of logistics and outsourcing is not really that old. So we have to create the product, we have to create our own product and look for other brand new products in the market that exist. Flow of capital is coming pretty much from everywhere. European first, I would say Asian probably second, and US probably third. We have a couple of funds in Europe. One is a JV with Norges Bank, and another open-ended fund that raises capital or equity on a quarterly basis. And we have also a JV with GI in the UK that develops and holds products. So there is no issue, if you want, in order to raise the money, and the issue is where to invest and how to invest. And we have for that teams on the ground that do this. And today, the development is really much the name of the game.
Okay, I'll come to you in a second, Sophie, on that. But Arvi, just in terms of the capital that's coming into WP Carey, have you seen a change in that? Is it the same sort of unstoppable machine almost that Joseph's talking about, that there are, that raising capital through the listed sector is actually straightforward for you guys? What's the position?
It's something I'm actually marginally less acquainted with on the capital markets team focused on that, but We've got the benefit of a legacy of managed funds in the past with retail investors, combined with now our public structure where we've got a substantial amount of institutional investors. We issue bonds, we issue stock. It has been fairly straightforward. Institutions, there's a lot of traction across Europe as well as from the US side. So in summary, I still think there's a lot of capital, especially from an American perspective, wanting to come into Europe for reasons that have been mentioned earlier.
And maybe, Sophie, I'll just pick up, what are the investors looking for? Obviously, there's lots of different potential fund structures that people can go into, and those have you seen any change in the demand of the capital and what sort of structures they're looking for to be able to access the market?
Yeah, I said my favorite topic, because I actually think that
That's very fortunate, Sophie. That's good.
The structures is our point. The structures don't matter that much. What the investors are after, and what we're advising them as well, is across investment strategies. So we're saying we bring the expertise on the ground. We have expertise on logistics, on retail, on offices. We should bring them the strategies that give them value, and then the structuring and how we put that into a box, whether that's a fund, an open-ended fund, should follow that strategy and the governance that the investors are looking for. And so yes, that does vary over time. Initially, just after the crisis, people were less inclined to go into funds because they had suffered some illiquidity in funds. Now, actually, again, it is seen as something that is very interesting because it has a diversified portfolio, it has good governance. We spend a lot of time in our own fund products as well to make sure that the governance would fit the liquidity profile, the terms and conditions would be as flexible, and actually maybe more flexible in terms of the fact that you can sell units and you can sell assets as a joint venture structure or a direct holding of an asset. So we've seen indeed changes over the cycle. Our strategy is we need to provide the best underlying investment strategy and the returns that are underlying, and the structure in itself is following the governance that the clients are asking us, but not the driving element of an investment.
Let's just quickly start with you, Arvi, in terms of the challenges that you see in investing in the markets. Coming from your perspective, what are the current challenges that you're experiencing in the market in terms of making deals?
I think it's very much the capital inflows, the competitive environment. This is a year where we've really had to dig in deep to try and find those off-market opportunities using the contacts we've developed over the last 20 years in whichever country it is, and spending a lot of time traveling across the entirety of Europe to dig up what we require. As being said, there's a lot of capital from abroad. Some of it might not be, has so much strategic thinking perhaps, and going for straightforward, I must do industrial, I'll do a few billion of that. And that kind of capital can be tough to fight against. So yeah, a little bit more digging, and that's not just in let's call it the core northern western markets. The further afield you go, it is surprising to see how much capital is there, and to try and provide some kind of extra raison d'être to work with us. And it's a tougher push, but it's still working.
Okay, good. David, do you want to pick that up?
Yeah, certainly. I think I would very much agree. It's using the contacts one has to make sure that one leverages them, but clearly there is a lot of competition in the market. But I think the fundamental thing we've seen, and as I mentioned earlier, we really see a lot of rental growth, is to focus on the markets where we see that and really genuinely believe it. And what we've frequently seen in our underwriting is actually we have underwritten too little rental growth. And we really have to believe what we're fundamentally saying and believe it really to the core. Because in fact what we can see is quite an extraordinary situation in some markets in terms of the levels of supply and demand, and much more growth than we've historically seen in markets. So although we see historically record pricing, we also see historical rental growth, and it's focusing very much on those places and not just chasing yield, not initial yield.
Yeah, I would agree with David actually, and I'm glad he mentioned rental growth. And today in logistics the market is very healthy. High occupancy levels, very few supply, not anything near what we've seen back in 06 or 07, with plenty of spec supply in the market, and sometimes unnecessary spec or unnecessary going up the risk curve. We're not seeing this, although we're monitoring in some pockets how this is going. And I think the next wave of value growth or of growth is going to come from rental growth, and we're starting to see this the last couple of years in Europe, and I think this trend will continue over the next 2-3 years. Just to put things into perspective, our US portfolio for the last 4 years, we've seen rental growth or rental change of 25% plus year on year. I've seen some deals with 45%, 50% rental growth. unimaginable for some of us here in Europe, but I think this is the next phase of what's going to come. On paper, it looks obvious, but now we need to do it.
Okay, good. I just want to pick up with you, if I can, Heinz, Joachim, just in terms of the challenges in the market. If you're an international investor looking at the German market, are domestic players in a more competitive position? Is it unfair? What's happening?
Thanks for that question. No, it's an equal play. I mean, all the international investors abroad are very much familiar with the German market already. So I think it's a very transparent market, I have to say. So probably it's a fair dealing. But just give me a chance to put out one observation I made. When capital flows of money, they're concentrating these days very much on Berlin. And my experience is whenever investment fund is calling me, they are concentrating on Berlin, 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 Berlin. And hi, Hans Joachim, I do have another opportunity in Berlin. So I think the reason behind that is the view that the rental levels in Germany, particularly in the CBDs and the cities, are pretty much lower than Paris, than in London, of course, and even Milan or Amsterdam, for example. So the fantasy in it, and in particular in Berlin for the last 1 year, is tremendous. And I wonder if that bet will be challenged or not. So we probably, and the German investors are probably much more clever or much more caution, because on the long run they had some more experience with the region of Berlin, and they know Berlin probably the way it works much longer. They could be wrong, and it could be really the wind of fortune for the investors for abroad. But this, I think, is very interesting to see from the German perspective for the moment, but open for the discussion.
Yes, exactly. I think there's two elements to it, and we like to combine the local knowledge, because we have a team as well that's on the ground, with an international perspective. And having seen that actually in the Dutch market as well, sometimes the local investor oversees something that's happening in a pan-European trend, and oversees the fact that this time there might be a structural difference to an investment theme. An example that's not from Germany, but it's from the Dutch office market in Amsterdam. The local investors in the Dutch office market were overseeing the trend for a very long period of time, because they couldn't believe that now for the first time the rent was actually growing, and it had been a period of 10, 15 years where that hadn't happened. But supply was concentrating and demand was concentrating in a certain area, and that led to rental growth. The first parties to see that were international capital to come in and notice that trend. And therefore, I think if you have a local team, you need to definitely make sure that you have that pan-European view, to make sure that as we're operating in a pan-European market, or actually a global market, that these trends are being taken into account in a market. We look at Berlin as well. We have a local team. We do think that there is actually a structural change happening in that market that justifies some of that growth. Whether it's all of it, to be seen, but I guess there is an interesting thing happening in that market.
And David, do you think your fiercely canny Scottish background is helping you in Munich?
Well, I'm not sure how canny my Scottish background is, but that's another discussion. But it certainly does help us a lot in terms of taking a fresh look at everything that we do, even markets that we've looked at before. It's absolutely correct. There are trends happening that have never previously occurred, and we clearly see that happening. We're learning the lessons not just throughout Europe, but taking lessons we've learned also in North America, also taking up Joseph's point with logistics. We've also seen what's been happening there. We also see on the negative side what's been happening with retail other places, and using also negative experience we've had elsewhere. So we do combine that to create a view when we look at each market.
And I just want to pick up a little bit on, you mentioned alternatives before and what was happening there. Is that the same for everybody, that everybody's moving towards alternative sectors in terms of looking at higher reward, higher returns? You've got a slightly different structure, but are you looking at these alternative sectors as well, and what's your experience of them, Arvi?
Yeah, we've always been very much focused on being an income investor, ensuring the tenancy profile is important, and therefore the real estate itself becomes almost a secondary aspect that we look at, which is slightly counterintuitive for being a $20 billion real estate fund, but that is the way we've looked at things. And as a result of that, we have diversification is a key part of our strategy, a wide variety of asset classes, countries, and so on, resulting from what is fundamentally quite a simple philosophy. We have always liked alternatives where there's critical real estate, where it's important to a company's operations. I think as more capital has come into Europe, as hospitality, as student housing has matured, it's just widening the pool of investment asset classes, widening the pool of liquidity, and so that's been driving a lot of people into these alternative asset classes. But they're places we've already operated for 45 years, so it's nice to see them increasing in liquidity and interest.
Okay, good. And for others, do you know, is this a secure way of getting returns, or a sign of, you know, of where we are in the cycle? What's your kind of view on it? I mean, is this a sign that these markets, like student housing, like micro living, which we'll be talking about later, are now beginning to be more mature like they are in the US, or is this really, you know, a move up the risk curve?
Shall I do that one? I think what's quite interesting, and we mentioned it a bit before, is some of the demographics, because even though in Europe there aren't a lot of the populations that are growing, if you look at the individual cities, most of the big cities are growing, and you're seeing a lot of people coming from the smaller towns to big urban agglomerations. You mentioned Berlin, which is having this fundamental change. Same with Paris, same with London. So I think that's one reason that's really driving residential, student living, and another alternative sectors. And as mentioned before, some of the big infrastructure projects as well. And you've got a lot of big global investors now, and they need to put a weighting in these investment classes. So yes, it's becoming, you know, UK first, and then continental Europe. It is becoming a more developed market.
What's your sense? Let's start with you, Heinz Joachim. What's your sense of what's the key to doing a successful deal in Germany for you? What's your sense of that? And then we'll go down the panel in terms of what's the key for doing a successful deal in Europe. And if you've got any suggestions about where that deal ought to be or what it should be on, I'll also take those as well. But let's start with Germany.
I mean, very much depends on the strategy and what you're looking for. I think it's quite easy if you find the right product. I think it's a very transparent market, well going. I think the question is, strategy must fit to the product and the market cycle. I think for historical reasons, Germany was always a strong economy. We are now in a political struggle a little bit, yeah? Welcome to the global world, but I think on the long run, it will be still something to mention within Germany, so it could be not a major mistake to invest there. But don't underestimate, Germany is very much a federal state. There could be some challenges and there could be also some opportunities. So Germany makes a little bit more different than other countries probably across the regions we're just talking about.
Okay, good. Arvi?
I guess what's worked for us over the last 20 odd years here in Europe has been spending a lot of time getting to understand individual countries, how they operate, their business culture, and the people in that market. And, you know, we're a very long-term investor. We take 20, 30, 40-year views. So, you know, we entered the Danish market this year. We were first looking there a decade ago. Took a while. It's a bit of an education from our side. It's also monitoring the culture to see what was originally an insular market is becoming more of a welcoming to international investors, and then you're able to find the right place, right time to step in and have the contacts to execute very quickly and efficiently. And that's kind of been our modus operandi in Europe, and allowed us to diversify very quickly, I'd say, across the continent.
Okay, good. Sophie?
I guess a similar answer. We spend a lot of time, we have 400 people on the ground. We spend a lot of time over the last years making sure that expertise is shared across the group. So we organize ourselves by retail expertise, logistics expertise, office expertise, residential. So for us, the key is using that local knowledge with the sector expertise, with the top-down assessment of where do we see the best risk-return alternatives for our clients, and matching the opportunity that we see and that we underwrite with our client demand. I guess it's very high level, but that is what for us is a successful deal, finding the opportunity, not doing the tourist deal, and using all of the knowledge in our platform applied towards our client strategies.
Okay, great. Joseph?
Not to pile on strategy and expertise and whatnot, I think a successful deal today is an off-market deal. Just know what you want, you go talk to the guys and then to the owners and then do the deal. Because that would fit perfectly what you want in the end. Should fit strategy, should fit expertise, should fit everything.
Okay, so if you weren't looking for an off-market opportunity, presumably BNP Real Estate would be the wisest choice, Larry. But
thank you.
Let's have a coffee later. No problem.
What's your sense of what's of creating a successful deal?
Well, I think having good advisors, probably I have to mention that one straight away. No, I think each European market, they're obviously, there's links and there's trends that we're speaking about across Europe, but at the same time, each market is very specific. And I've done most of my career in France, which, there are various challenges. It's a big liquid market. But, there are language challenges. There are specific laws in France that you won't see in other countries. So I think a combination of looking at the European trends, looking at some of the points we've mentioned in terms of asset classes, in terms of demographics, in terms of yields, in terms of rental growth, but also having a really good local presence and knowing exactly how the markets work, especially if you're going to get into more complicated deals in development, in value-add opportunities, then it's essential to do that part as well.
Okay, good. David?
I would, of course, echo many things that have been said, but I think I would really emphasize the fact that you really need to believe the things that you are doing. Don't try and do deals that you don't genuinely 100% believe in and where you haven't done your strategy, where you haven't done your top-down and bottom-up. You need to know that. You need to really believe what you're doing. And there's obviously two sides to every deal. There's also the seller side, and we've also had the experience where a seller did not know the asset they were selling. That's also something that can turn into a terrible waste of time for absolutely everybody. So also focusing on the deals where the seller is well advised, where the seller is well organized, and you can actually transact at the end.